What's up guys, welcome to the channel, to a new episode of the PA course, and today we're going to talk about the last episode of this series, and that's the failure setup. One of the most, it's not like we have 1,000 setups, the most complicated setup to learn, not really to spot and to trade, but to learn from the theory, from the 5 we've learned. But it's all good, as always. I got you guys, I got the images, I got the explanation. We'll learn this together. Like and subscribe as always, I really appreciate that. Let's get into the video. So failure setup, first to avoid confusion, is not the same as a failure. A failure is of course a point where price fails to continue the trend or fails to do something. Maybe I didn't really explicitly mention it somewhere, but I do think you guys know what a failure is by now. If you're in an uptrend, price fails to continue the uptrend, then this is your failure, because price fails to gain, price fails to continue the uptrend. Same with the downtrend, this is your failure to gain, or just a failure. Same in a downtrend, if price doesn't create a new low here and doesn't continue the trend and starts gaining, then this is your failure to lose, but just failure in general we call it. So these are failures, but this has something to do with the setup surely, but not any failure, or not the bigger failures as we know in the bigger picture, because this is not going to be our entry or our stop loss, but more about it later in the video, just to avoid early confusion. So you may think a failure is also similar to a hold from a gain hold, and that's correct, they're similar, but they're not always the same. Sometimes a hold can be a failure of the move, but that's not always the case. But why do we focus on failures? Failures, like an example I showed, but also an example I'm going to show how we trade it. A failure is similar to a hold. It's a place where liquidity lays, where if price retest, a strong reaction can be. And with failures, because we're going to see that we might have a failure here somewhere, and price picks up the liquidity there and then comes back to this level. So then you might argue that the liquidity is gone. Why is it a play? If the liquidity is gone, there's not structure. That's why failures, in these cases, what I'm going to explain later, they act as a sort of zone or level where market makers and just traders in general might want to make a play, or might want to continue the trend. For example, if they came from here, created some type of failure here, then gained it and then come back here, retest it and make new highs. The same as we learned with origins or with holds, they create a hold here, the price can return to the hold and make moves. So basically the same thing with the failure. So here's a picture of a failure to gain, however you want to call it. And this still has not much to do with the setup. It's the last thing I'm going to talk about, to give you an example with candlesticks. Here you're in an uptrend, you see it, high, higher low, higher high, higher low, and then you see our price can't create a higher high. So this is your failure, price breaks, blah blah blah, comes back, taps that failure, or the hold, because you can say this is the low, inverted, and the low, gain, hold. So sometimes the hold and the failure are the same, but as you see, they act the same. So a failure can also be a point where liquidity lays and price will return to. Alright, so let me explain the failure setup as we know, as we trade. This image might look complicated, but take a breather, it's not difficult, I'm going to explain it. This failure trade is actually, you're going to trade a reversal, but the failure in a reversal, not like a reversal and you entry on the hold. You're going to trade the failure in the swing high. So as you see here, you have your reversal in small here, low, swing high, lower low, gain, hold. And I indicated this with the colors, and this is basically zoomed in. Here you have your low, this creates a low, this is the point. Then you have your swing high, creates a swing high here in this box, this is the box. Then the low, of course, and then the low is here between these two. As you can see, I don't think this is that difficult. Maybe it's a bit complicated, but I hope it's not. And then you see the gain here in this box, and then the hold, but hold is not that important for now. So you're going to look for reversals. Going to draw it in big here. Reversals, you're looking for low, swing high, lower low, gain of the swing high, hold. But this part is not as important. We're looking at this part and surely the swing high. If you don't know what a textbook reversal looks like, or not familiar with the swing high, lower low terms, surely check out if you haven't yet, because it's also part of the series. Go back to the reversal episode and just look at it again, and then you're familiar again, write it down, have it in your notes somewhere that you really learn those terms and learn a textbook reversal. That's something you should know by now. Alright, so now it's going to be a bit more technical, a bit more zoomed in, but stay with me and this is going to be easy. You want to focus on the swing high. I'm going to draw it one last time. The swing high is this high, the high that directly makes a lower low. And in this picture, I indicated with the colors 2 seconds ago, you have here, or low, swing, no, this is our low, my bad, low, swing high, lower low. So this is your swing high. Can't zoom in because it's a picture, I'll make it a bit bigger if I can. So you have your high here. You're going to look at the failure of your swing high. As you see, this is your high. I indicated here the move to the high. This chart is inverted, so if you're confused by the colors, it's an inverted chart, but it's a picture perfect example, so that's why I took it. This is your move to the high. The red candle is the last time, or the green candle is the last time price retested and made the high. Then you see price loses it, so price is just creating a higher low to continue the trend here, this local uptrend here, from this low, uptrend, 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 fails. So this is your failure, very important. This is your failure of the swing high. That's the level we want to look at, not the failure in the low, lower low, in the gain and the hold, just a random failure. No, the failure in the swing high in a reversal. And it might seem this is very zoomed in, this is going to be a very minor level. Does this have any impact? Yes, it does. So again, in the swing high, you have to look for your failure. So you indicated this failure. Then if you skip a bit into reversal, you have the swing high, where we looked for the failure. You have your lower low, gain, hold, and price makes new highs. So price makes new highs and then comes back here to our failure. It's a very important level, and of course this is not the picture. I'm going to show the picture with everything on one picture after, but price can return to this, and basically this can be the hold, as we call it in the reversal setup, the hold, but this can also be just a point where price comes back later. But this is the hold as you know it before this video. From a reversal, you have the gain, the full gain, the hold, where you entry. This is then, instead of the hold, the failure. So here's the full pick indicated with all the things what we've just done. So here is the reversal, because you create a low here. You have your low, swing high, lower low, gain somewhere, hold here. You can have your hold here, that doesn't matter for this story. Here in the swing high, we identified the failure, and as you see, price gained this, or it's inverted again, so price technically lost it, but in this example, price gained it, made highs, and then came back to this failure to pick up liquidity, or not really liquidity, but for you it's easy to understand it's liquidity, and made a move. Same, they even tapped it twice, so even better. That's why this was a picture perfect example. So they wicked it, perfect entry. I didn't do it with the box here, but this would be your entry, and then your stop loss can be very tight, but you can do the same stop loss strategy or rules that we use for when you just play reversal and comes back to the hold. Just a tight stop loss, 0.40, 0.80 on Bitcoin, Ethereum, on the massive coins, or forex currency pairs is even lower. If you specifically trade a failure, you don't need to necessarily cover the entire low, which we do when you trade a reversal. We place our stop loss nearly to the lower low. Here you can just do a tight stop loss, you don't have to cover everything. So that was kind of it, guys. I'm going to have a little summary here with arrows though, but it's not going to be more difficult. So we have our reversal. I'm going to give the names once again. We have our low, swing high, lower low, gain, hold, new highs. Now whether this hold is actually there or the hold is not there and price just does this, for failure setup it doesn't matter. So as mentioned, we're going to look for the swing high. If you don't understand how we looked for the failure, just go back in the video. We're going to the swing high, so that's the swing high. You should know what it is by now. Is the high that directly creates the lower low, and you're going to look for the failure. So where price failed to actually say this was the bottom, and we're going up again. So where did price fail to continue this local uptrend? Here, that's your failure, that's your line, and price will make a new low, then gain that, make new highs, blah blah blah, and then return to this, and that's where you long or short in the other direction. So price does this, comes back here, wicks it, and makes a move. As mentioned with origins as well, or with everything, this move doesn't mean it's going to the moon or a 10% pump. This can just be a 1% pump, 0.80% pump. That's why sometimes your stop loss shouldn't be that big, because otherwise it's not really tradable. But that also comes with experience. So guys, I don't think this is actually that difficult as I made it sound, but maybe it is a bit difficult and a bit vague until you actually spot it on the charts. A failure setup, a picture perfect failure setup is not really there every second. You have a lot of reversals because you have a lot of local highs and local lows, but where you have a clean failure and then a clean break, because price can also with the gain just slow down here and then go up, and then you don't want to trade it. Same with the move to high loss retest. If price doesn't clearly break it, same as here, price doesn't clearly gain it, the probability is a bit lower. So a failure setup, I personally trade it maybe, of course I don't do this on purpose, just when I journal and I look at it, maybe 1 in 10, 15 trades is a failure trade because it doesn't appear that much, but when it appears almost picture perfect, the probability is very high. Almost like an origin trade, the probability is very high, but only if it's picture perfect. If it's not picture perfect or it looks a bit off, it's still tradable, of course, but then obviously the probability is not going to be insanely high, but still tradable. For now, that was it, the last of the 5 episodes of where we discuss the setup. We have still 3 episodes to go, so surely stick around for that, because next episode might be the most important one, because without the next episode I'm going to learn you guys how to chart. You're not going to be able to find these levels, find these setups, so very important video. For now, I want to thank you guys for watching. If this was useful, surely leave a like and subscribe. Join the community, the link is in the description, and I'll see you guys in the next video. Bye.